Martin Bissett. Een beetje het buitenbeentje van dit evenement vandaag. Hij is volgens de Britse publicatie Accounting Today een van de meest invloedrijke personen in accounting in Engeland. En Martin heeft het over iets waar we het ook vandaag al over hebben gehad, over pricing. Hè. Toch ook niet onbelangrijk. En misschien nu we het over pricing hebben, nog even dit. Toen we aan Martijn vroegen wat zijn vergoeding was voor vandaag, zei hij, geef gewoon €500 aan een goed doel en dat volstaat. Dus ja, het zegt heel veel over Martin. So Martin, deze sessie gaat in het Engels zijn, uiteraard. En Martin is van de UK. Martin, we're very happy to have you with us today, and the floor is yours.
Oh, thank you very, very much. Do you know what? That was possibly the very best introduction I've ever had. And so thank you very much for that. And for everybody who is watching this, welcome. I'm delighted to have the opportunity, and I thank Codebatch very much for the opportunity to speak with you today. I hope that me speaking in English at this speed, I hope that my content is going to be something you can use immediately to improve your practices, to improve your profitability, and to improve your pricing. Now, I know what you're thinking. Did they save the very best speaker to last? Well, Femke has already spoken, so no. But, you know, I'll take second or third. That's not too bad for me. So for everybody who can hear my voice right now, I need to share with you something that is not only very important, but also kind of sad. And it's what you can see on your screen right now. This that you're looking at your screen right now that says professional service firm at the top is called the Baker model. And it can be found inside a book published in 2003. So that means 18 years ago, nearly 19 years ago, this model was built. And in the accounting, or indeed professional services professions, we are still struggling to understand it. Here's what it is. So right now, guys, you can see professional service firm, and you can see on the left, revenue. So what Ron Baker was arguing 18 years ago was that professional service firms, specifically accountants, were basing their success or basing their income or basing whatever they achieved in their career based on revenue. How much money can we bring into our firm? Not how much can we keep, but how much can we bill? And this revenue was a composite of 3 ingredients. It was a cake with 3 ingredients. The first ingredient was capacity management. I'll come back to that. The second was efficiency. I think you know what that means, but I'll come back to that. And the third was cost plus pricing, meaning that if you had 10 people working for you, it was really a case of how many hours can I squeeze out of these 10 people that can be billable to the client, that can be billed to the client, and my pricing as to how much I bill to the client was simply what it cost me to deliver the work plus a little percentage. And it used to be known as the 33-33-33 model. So 33% of the price was overhead, 33% of the price was direct costs, and 33% was profitability. Sometimes it was worse than that. And so Ron Baker would say to us, so this cannot continue. If you want to thrive, this is a survival model. You will survive with this model, but you won't thrive with this model. And he was asking accounting professionals back then, do you want to survive or do you want to thrive? And if you want to survive, well, here we go. Here's our model right now. You know exactly what to do. Hire some people, squeeze as many hours as you can out of them, bill the client for as many of those as possible, use the 33-33-33 model. Ta-da! We have ourselves our business. But Ron, he looked beyond that. And he said, for so many of us, that's what all we're ever going to do. And that's why I said it was sad, guys, because my experience of 24 years of working with accountants is that's exactly all that many accountants ever do. Their entire careers end without ever having done more than chasing deadlines for a living as an extension of government function. That's all they ever amounted to. They never did build the beautiful business. They never did become very profitable. They never did have any great impact in their clients' lives. They just took care of the essentials. So I'm asking you today to decide who you are, because most of you, though you may want to be something else, sadly, unfortunately, you are this. And I say sadly, unfortunately, because there's so much more that you could do for yourself and for your clients. There's so much more impact. There's so much more purpose, should you want to. But most of us, whatever we say, whatever our website says, actually only ever do this. So here's where Ron said we should go. And Ron said, if you want to survive, use that model. If you want to thrive, try this model. And this was known as the professional knowledge firm. Okay. Now, Femke just said, sell the solution, not the product. Sell what it is you solve, the problem that you solve, not what package or box or name it has. And this is kind of what Ron was saying. He was saying that the professional knowledge firm who would thrive in the future, this is back in 2003, wouldn't be based on revenue. All of their activities would be based on profit. And that profit wasn't a cake made up of 3 ingredients that you added together. It was made up of 3 ingredients that multiplied. So here's how he did it. He said, so if you want to be a professional knowledge firm and thrive, you base your firm around profit, not revenue, which means you have to manage capital, not capacity. Here's what he means by that. He named 3 different types of capital that we all have in our firms. Number 1, intellectual capital. We know how to solve problems. We have the knowledge. That can be sold. It's intellectual capital. Then he said the second capital was technological capital, by which he meant we have software solutions that may allow us to work better, allow us to improve our practice management and our workflow and our output. So it's how well we manage our knowledge, how well we manage our technology. And the third thing he mentioned was social capital. So guys, it was about intellectual capital now. It was about technological capital. It was about social capital. How many hands can I shake? How many people can I have conversations with? How many opportunities? How many problems can I learn about? Those 3 capitals, intellectual, social, and technological, were then multiplied by not how efficient you are, but how effective you are, how good you are at selling your knowledge, how good you are at making new relationships and connections, how good you are at using your app stack in your practice. This became the first major ingredient. Then how effective we are, and then the pricing became all about not cost plus pricing, 33, 33, 33, but rather something more important, pricing on purpose, which meant that no longer is our conversation with our client all about compliance and meeting deadlines and your tax return is done. No more. but it was about business and future and lifestyle and dreams and ambitions and growth. And it became, what are you in business for, Martin Bissett? What are you trying to achieve, Martin Bissett? Because we have a lot of intellectual capital that can be used to help you get to where you want to go. And we can hold your hand and help you get there while you go. We're not just compliance people. 2003, guys, 2003. And still, as a profession, we struggle, okay? So I've learned over the years that I need to take things and put them into very straightforward, straight talking ways. So what I want to bring you today is the pricing element of this equation, okay? And I want to give you the 1, 2, 3 prices, the only 3 prices that you will ever need. And if you are sat there thinking, could that be right? There's only 3, what, no matter what the situation, I only need 3 prices? Well, what if it's a current client? 3 prices. What if it's a new prospect? 3 prices. What if it's a referral? 3 prices. What if it's an extra work order from a client I've had for 20 years? 3 prices. That's it, guys. Are you ready? Take down some notes. Get a pen, get a pencil, draw on your friend's face, whatever you need to grab the following, because we can't use the slides. So you're going to need these 3 prices, okay? There are only ever 3 prices that you need in your firm. Are we ready? Here we go. Number one, the ideal price. Number 1, the ideal price. Now, if you are billing for tax work, if you are billing for audit work, if you are billing for bookkeeping, if you are billing for forecasting, if you are billing for strategic planning, if you are billing for anything, migration to cloud, anything at all, then you should charge what you want for it. Now, straight away you'll go, wait, Martin, we've got you now. Now we've got you. Because we can't just charge whatever we want because the client won't pay it. And we're in a competitive market. So we have to charge €500 either side of what the existing accountant is charging. Or if we are with our current clients and they've gone out and they've got another quote, Martin, we can't be €5,000 above that. We won't get the work. And so what? Well, Martin, if we don't get the work, we won't have the work. Now, think about your career and your practice's history and tell me about the time when you were short of work. How long ago was that? The last time you were short of work? You fill yourselves up with work. You always have too much low profitability work. Until you start charging what you want for the work, regardless of what the market is charging, regardless of what they might want to pay, regardless of how loud the client screams, I don't want to pay that, that's too expensive. Until you start choosing which work you bring on and which work you don't bring on, you will be low profitability, chasing government extensions and deadlines for your career. And if that's what you want, that's fine. But your first price is the ideal price. It's the price that you want to charge. Your job, once you have that price, is you then have to justify that price. Now, that's the next part of it. How do I justify my €5,000 price or my €2,500 price? So that's our second bit. But the market has been proven to stand what you can justify. My career is full of people saying, I can't believe it. I got them from 2,500 to 18,000. I can't believe it. I got this client and that client. I won 3 out of 3. I can't believe. all because they learned how to justify their price. So your first price is your ideal price, the price you want for the work. You need to work out how to justify it. That's true, but that's the first price you need. Do not be influenced by the lowest, cheapest people out there. Okay? Our second price is our cost price. Now, this is the easiest to calculate of the three. We know what it costs us to deliver a job. We can calculate these things, whether we're using billable hours or not. We know how to calculate a cost price. The difference that I'm going to ask of you is where most people come up with a cost price and then decide what they're going to charge based on that cost price. That's not what you're going to use your cost price for this time. In the BISSET system, you're going to use the cost price and calculate it to make sure that your ideal price gives you enough profitability to make it worthwhile. The superior accounting firms that I see, whether I work with them or not, are now looking at gross profit margins of 70%. They have had enough of doing low value work. They want to earn more for the skills that they have. So the cost price is not to work out what we're going to charge, it's to work out if there's enough profitability in what we're going to charge. And if there isn't enough profitability in what we want to charge, then that ideal price, it goes up so that we have got enough profitability. Now, I know what you're thinking, Martin. You're in the consultancy world, you're in the speaking world, you're in the advisory world. Do you have a 70% gross margin? Yes. And so do many of my clients. That's how I know it can be done. Okay, so price number one, your ideal price. Price number two, your cost price, to make sure that your ideal price is at the right level of gross profitability. Okay, now comes the difficult third price that you need. The third price that you need is the walk away price. This is where you need to have guts, strength, confidence, determination, singleness of purpose. Because what happens in so many accounting firms is that they come up with their price, let's call it €5,000. They go to their client or their prospect with that €5,000, and the prospect or client makes a sound like this. And suddenly the accountant makes a sound like this. And as a result, the accountant collapses on price under even the slightest pressure because they're so scared of not getting the work. Now, if we have a cost price and an ideal price here, and we put our walk away price, let's say our ideal price is €5,000, let's say our cost price is €1,000. If we put our walk away price in at €2,000, saying we won't do it for less than €2,000, hey, Mr. Client, hey, Mrs. Prospect, you can knock us down by €3,000 because we will come down. We'll negotiate all the way down to 2,000, and that's our walk away price. We will not do it for less than 2,000. If you put the walk away price all the way down there, then guess what's going to happen? Your prospect or your client is going to think that you are a liar, a con artist, because there was €3,000 of room to push you down. So we can't do that. So the walk away price has actually got to be pretty close, hello, to the ideal price. So we've only got to have a little bit of wiggle room on a €5,000 proposal. Maybe that's only €500 of wiggle room or movement between the ideal price and the walk away price. We've got to protect the profitability. So there are your three prices: the ideal price, which has to be justified, the cost price, which is used as a check to make sure you're profitable enough, and the walk-away price that protects the profitability and makes it look like your first price was the right one. Now, here is the golden rule to wrap those three prices in for you, okay? On that difference between the ideal price and the walk-away price, make sure that you never give anything away without getting something of equal or greater value in return. I'm going to say that again. Never give anything away without giving something of equal or greater value in return. Here's what I mean. Let's say that you are talking to me and I'm thinking about becoming your client. And you say, Martin, we have assessed your needs. We know what you want to achieve. We know why you're in business. We know what your current accountant does for you. We know why you are considering changing. Here is our proposal for our support to get you to where you want to go. It is €5,000. And I make that noise. Okay? You don't care about that noise. And you say, problem, Martin? And I said, well, €5,000. I'm only paying €3,500 now. That's a huge leap. That's €1,500 more. What's going on? And we start to justify. We start to say, well, let's take a look. €1,500 over 12 months of the year isn't really very much, a little bit over €100 a month. Are your dreams worth €100, just a little bit over €100 a month extra as an investment, Martin? Or are you not prepared to invest that kind of money? Are your dreams not worth €100 plus? And I go, yeah, okay, all right, okay. And I still don't like the €5,000 though. And you might say, okay, well, there's very little wiggle room. And I maybe can take a little bit off the price, maybe a little bit, but I'm going to need something in return. And so Martin says, what do you mean? I said, well, once we've proven that we can do what we say we're going to do, I'm going to come to you and I'm going to ask you for 2 referrals of your kind of quality, of your kind of business, Martin, people you know, and I'm going to want you to get them in the door. I'm going to want you to introduce us for me. And that's not just 1 year. I want you to do that for me every year. If I'm going to have to come down on price every year, you're going to have to do something for me every year. Or you might say, well, Martin, we want marketing collateral. We want you to do a video for us on our website. We want you to do a case study for us or a story for us because we can win business that way, and that's worth us coming down that €500. So it is up to you guys. It's the guts. Most accountants do not do what I am advising you to do because they haven't got the guts. They don't believe in themselves. And when they don't believe in themselves and their own practice and their own price, it's very difficult to convince the client. So we have to believe in ourselves. And we believe in ourselves by giving ourselves proof to work from. Proof that we are worth €5,000. Because think about it right now, guys. Your average price that you charge right now, was that the average price you were charging 3 years ago, 5 years ago, 10 years ago? Or have your prices gone up at some point? So at some point, you've charged more for what you do than you've ever charged before. So you've done it before, so why can't you do it again? Ideal price. Okay? So understand that to be a surviving practice that does okay, that is average, mediocre, then we can use that professional service firm model that you saw on my screen, which was revenue as a combination of cost plus pricing and capacity management and efficiency. Or you can choose, if you want to be a professional knowledge firm that focuses on profit and gets its profit from being effective in its use of those 3 capitals: intellectual, technological, and social, has an impact in clients' lives. So it's improving clients' lives as well as earning more at the same time. And because there's a purpose, improving the client's life, then you get paid more, because we pay more, as Femke's already shown you, for solving our problems than for selling us some services. We don't care about being compliant by law. That's a necessary evil. We care about getting to where we want to go. If you can take us there, we will pay more for that. I've got 24 years of proof from people like the people who are on your screen or on this screen behind me right now. So decide which model, decide who you want to be. Average accountant, there's no criticism there, by the way. You just have to have the correct expectations. Do you want to be average accountant or do you want to be super accountant? The choice is yours. Doesn't matter which one you choose, it's up to you. But don't believe that you're going to be a super accountant if you're behaving like an average accountant. So average accountant or super accountant, the choice is yours. What is your average price? The choice is yours. As soon as you decide you're going to charge your ideal price and you're going to justify your ideal price by understanding the business owner's needs better, then your average price goes up. Your profitability goes up. And then you make sure that your cost price keeps that in check. And then you make sure that your walk away price not only keeps your ideal price in place and protects your profitability, but gets you things in return should you ever have to climb down in negotiation. In closing, guys, I have 1 minute. 2 miles from this office, there is a top 30 firm. In that top 30 firm, there is a tax partner whose proposals are written for him by a tax manager. The tax manager has to increase the price by 25% in the proposal because she knows that the tax partner is going to collapse by 25% in negotiation, bringing the price back to where it should be in the first place, rather than suffering a loss in negotiation. How crazy is that, that a top 30 firm has to do that? Don't let you be the same. Let you be the firm that improves and changes business owners' lives by getting what you're worth for the intellectual property that you have. Guys, thank you very much for being with me on this. Sorry we didn't have the slides to go with us, but I'm sure we can send those to you. On that note, I will pass back to the guys in the studio and wish you the very best of luck in building your firms.